Credit to Keys Roadmap to Home Ownership, where I guide you from fixing your credit to holding the keys to your first home. I'm your host, Yana Dela Paz, real estate credit coach, and your guide on this journey to home ownership. Whether you're starting from scratch, rebuilding after setbacks, or leveling up your money game, this show is for you. Let's go from credit to keys together. In this episode, we're going to talk all things based on requirements for credit score and DTI. DTI is debt to income ratios. All right, and that is super critical because the loan officer who's going to review your credit, when it comes to approving you, they are looking at all of your stuff. They are looking at everything on your credit report. They're looking at all the money you have in assets. They're looking at all the money that you bring in, and they are making a determination based on not just that credit score, but your debt to income ratios. All right. So to start off with, let's talk about those credit score requirements. Now, the minimum credit score requirement for a conventional loan is a 620. FHA loan requires a minimum down payment of a 580. There is another FHA loan where they can actually qualify you as low as 500 credit score with a 10% down payment. A jumbo loan requires a 680, and then you have a 203K loan, which is an FHA-backed mortgage that allows a home buyer to finance both the purchase of the home and the cost to rehab the property. Then there's 100% financing loans, like a VA loan for military and retired veterans and a USDA rural loan for low and moderate income households. Each loan besides the 100% financing loans has a minimum down payment requirement. For a conventional loan, the minimum down payment requirement is 3% if you meet the income limit requirements, or is going to be between 5% to 20% depending on your credit score and DTI. FHA loan requires a minimum down payment of 3.5%. A jumbo loan can vary down payment requirements between 10% up to 20%. 203K loan minimum down payment is a 3.5% of the total purchase price and the renovation costs. That's super important to remember. So let's review DTI requirements now. All right, so one critical aspect that many newcomers overlook is their DTI. They overlook this because a lot of times they don't even realize that's something to even think about because they're so hyper-focused on just the credit score. And DTI holds just as much, if not even more significance when it comes to getting you approved. All right. So that's why I say it's important to monitor your credit score. Yes, I say this all the time. It's super important. I'm going to link below a system that I use for all my clients to make sure they are mortgage ready before sending them off to the lending team. All right. So the lending professional examines both front end and back end DTI requirements. Front end DTI includes cost for mortgage principal, interest, property taxes, homeowners insurance, association fees, also known as HOA, or the mortgage insurance. Back-end DTI encompasses all other debt reporting to the credit, such as your car payment, your student loans, credit card payments, personal loans, and also includes child support and alimony. So let's review back-end requirements since this is within your control right now when we talk about DTI. FHA and the 203K loans back-end max requirement for DTI is 43%. A VA and a USDA back-end max requirement is 41%. Conventional is a 34%. A jumbo loan could be around 45%. So now you understand DTI, and you may be wondering who is funding these special purpose credit programs, right? Grants, incentives, and rebates. Catch me in the next video as I break that down to you so you are highly aware.